Hey everybody, David Bartosiak with the Momentum Trader at Zacks. Going over our chart of the day for August 25th, 2014. Here we're looking at the crude oil prices. I pulled this chart up going back to about the end of 2013, kind of show you what was going on then. Back then, oil was about $84 a barrel. Oh, by the way, this is light sweet crude, so trades under the futures contract CL. So you had that big run up during 2013. We got all the way up to kind of the 112 area, and then pulled back a little bit. Came back down through the end of the year, down to kind of 91.50 ish. It's kind of what we're looking at there. Drew in a few lines here. You got the psychological $100 mark. You also have the 2012 high up here at 110.55. The 2011 high at 114.83. Just to kind of show you what oil's been doing recently. I said in the commentary that oil will have a tendency to kind of find a range, bounce it forth, back and forth between the range for quite some time, and then it'll go on maybe a 2-month kind of trend in any particular direction. So you had one coming off the highs in September 2013 all the way down to late December of that year, and then kind of moseyed our way back on up to about 108 earlier this year in June, and then things kind of started to fall apart. Kind of interesting though when you talk about June. I mean, that's around the same time that Mario Draghi went ahead and had the negative interest rate policy over there in Europe. So that kind of correlates with dollar strength, and that's a lot of the reason why you're seeing oil down where it is today. You got bombs going off in Gaza and Israel. You got the whole thing with the Islamic State in Iraq, but still we have oil down at 93.35 is where it closed today. So it's more of a dollar strength issue than it is anything tied to strictly supply and demand coming out of that area of the world, or even really any sort of fear trade. You're not going to see that here in oil right now. But so we've been coming down here since June. 93.35 is where we are now. Kind of the next stop down is going to be the low that we saw for the year, which is 91.24. And then the next step down after that is all the way 85.90, which was the low from April of 2013. So a couple areas to watch out for on that. In the meantime, keep an eye for a reversal, because oil is going to sit here and carve out this range, and we won't really know where that range stops until the market tells us to. So try not to forecast and think that you know exactly what's going to happen. Just take a listen, and right now what the oil market is telling you is that it's going to come down a little bit. So 91.50 again, this is a area to watch on oil. Thanks. Have a good day.